A very good morning to everyone. This is Doug Campbell with Right Way Options and the morning market preparation video for July 31st, 2017. Well, this is the last trading day of July. And boy, I tell you, you look at the Dow and it looks like we're going to the moon. But I've got a little concern here, and I'll share that with you as we go forward. But first, the diamonds closed really, really strong on Friday, moving up, setting a new record high, and we're gapping up this morning. The futures are pushing this morning for a sharply higher gap open of about 45, 50 points on the Dow. So we're gapping up to a new high. Now, anybody that has followed me for very long knows that any and every time we gap up to a new high, I have a concern. I have a little suspicion in me. And that suspicion is that we could see gap up setups like that can set up whipsaw prices. Whipsaw price action. That is, we gap up here, and what happens is a lot of people, inexperienced traders and things, they will chase in, they will jump in as soon as the market opens. They get real excited. They get overly rambunctious here, and they chase. And that sets up the possibility that the professionals that created this gap are doing all of the selling when the market opens. They needed to create that emotion to get someone to sell to, and they sell as soon as the market opens. And they sell to all of those retail traders, those inexperienced traders that chase in. Now, I will not say that is going to happen today. I'm not trying to predict that is going to happen today. I'm merely pointing out the possibility exists. Okay. And then when you take this into context, we've got the smallest index in the market, only 30 companies in the Dow, trying to lift the entire market back out of this doldrum. Okay, so let's take a look at what happened on Friday. First, new record high here on the diamonds. Let's take a look at the SPY. The SPY had a beautiful rally back, but let's be very aware of the fact that we are still below price resistance. Okay? And that price resistance is important. Any rally back, and you can see we're expecting a little gap up here, not like the Dow, a little gap up, about 3 points on the ES futures, the S&P 500 futures versus 50 points on the Dow futures. Okay, so we're looking at a little bit of a gap up, so we're not getting as much participation here. Little concern. Now, the fact that we're underneath that resistance is not a problem. We can rest here for a long period of time. I'm not suggesting that the market's ready to fall off a cliff. I'm just suggesting move slowly this morning. Be a little bit cautious. Don't chase in. Don't let the emotion of the day wind you up to the point that you make an emotional decision rather than waiting for that market to prove which way it wants to go. Okay? So SPY, nothing wrong with the SPY. Trend is still up. Everything is still up in the market. Now, IWM has a little concern because IWM fell below. We finally rallied above this resistance area, fell back below and closed below that level on Friday. The move up this morning, it looks like it's going to be right to that line. So nothing here impressive here on the IWM. Nothing terribly what I would call bearish at all either. If we were to throw this trend line up here, we've got a trend. Okay, so nothing that would suggest that we're ready to fall off a cliff, but certainly reason to be just a tiny bit cautious. And then when we look at the Qs leaving this really ugly candle behind last week on Thursday, Friday, this rally back did nothing more than come back up to resistance. Now we're showing a little bit of a gap up here this morning on the Nasdaq. Okay, about 11 points. Somewhere around there, or the futures are suggesting about 11 points. Now, that would be about the perfect place, wouldn't it, to create a bearish engulfing candle. If they wanted to end this today, wouldn't that be about the perfect setup? Now, all I'm suggesting is that we wait, that we pause just a little bit. Don't get emotional. Don't chase into this market. Wait, watch, and be ready to strike at the right time. All the markets are in an uptrend. Okay, I'm not suggesting any pessimism or bearishness. I'm suggesting be careful. Remember, successful trading is a lot about timing. You got to be at the right time. If you chase, you're often entering at the worst possible time. So avoid that emotion, maintain your discipline, follow a set of rules, and that will protect you from that emotion. Okay, let's take a quick look at the VIX. Whoops. Now the VIX closed well off its lows here on Friday. And even though the diamonds, set a new record high, that didn't improve the VIX overall because the other indexes didn't follow suit. They didn't make new record highs. So this is just giving us a little bit of an indication that a tiny bit of fear could be creeping into the market. And we should be watchful of that, okay? Again, we could easily come right back down here. But just a little bit of inclination that a little fear could be creeping in, and it wouldn't take much. Notice how quickly this can spike. Wouldn't take much to spike us if we start to roll over. So be very, very careful, okay? On the economic calendar today, we have just a couple things of really any importance. Chicago PMI. The PMI has been really strong, actually hitting a 3-year high last month. Consensus has that pulling back just a little bit here today. Nothing, it's still going to be very strong. Pending home sales, on the other hand, have been lower. 3 consecutive months, they have drifted lower. But the consensus today is suggesting that we'll see that bounce back. And then we have the Dallas Fed survey, which really isn't much of anything to worry about. It's been strong and it's expected to stay strong. And other than that, we have a whole bunch of bond announcements and things like that. Nothing really to worry about other than those 2 items. Let's keep in mind that this Friday is the big number of the month. And that is the employment situation number, which the market, the Fed, everyone seems to focus in on. So that's on Friday. Had 135 companies that were reporting earnings today. There's almost 1,500 companies reporting earnings this week. This is a huge week on the economic calendar. So please, please, please make sure you're checking and double checking when the companies report, those that you are thinking about buying, those that you are holding. Make sure you know when those companies report. Do not be surprised by that. That's just lazy trading, and for the most part, you'll regret that. So just stick with your trading, stick with your rules, stick with your plan, maintain that discipline this morning, okay? Now, we are still in a trend, so I will continue to look for long trades, okay? But I'm going to be just a little bit cautious, which means I'm probably going to stand aside for about 20 to 30 minutes this morning before making any new decisions, which gives me plenty of time to manage my current portfolio, stocks that I held over the weekend, and I don't have to chase or rush into this market. The market will be there and clues will develop for good trading if I just wait. Okay, everyone. Hey, if this is the first time you've ever seen this information before, do me a favor and click that subscribe button on YouTube and also the follow button. And hey, it helps me out, and I would really appreciate it if you could drop a comment or click that like button. I would really appreciate that as well. Everyone, have a great day. I wish you all great profits, and I will talk to you all soon. Take care now.